Hey everybody, my name is Matthew Sambanis. I'm a certified public accountant. My firm is based in Long Island, New York, and in today's video we are going to discuss the luxury market crashing. Yesterday I did a video on people flocking to McDonald's over $5 value meals, if you'd like to call that a value meal, and basically the lower and middle income class economics of America and the world for that matter. And today's video we are going to discuss the middle class, upper middle class, and for that matter rich, and the people who are looking to keep up with the Joneses and how they're being affected by the current economic slowdown. We're also going to discuss what I believe will happen at the end and how to profit. If you're into economics, finance, making money, and other things of that nature, please be sure to like, comment, and subscribe. And to give you a brief overview of today's video, and I'm going to try to keep it short. I know I always go 15-20 minutes. I'll try to keep it to 10. I even have my timer. Wish me the best. We're going to discuss Rolex and other luxury watches. We're going to discuss LVMH, which is the world's largest luxury brands company and publicly traded. They make, they own Dior, Louis Vuitton, Fendi, Bulgari, which I don't even know who Bulgari is, but obviously it's a high-end brand, Tiffany & Co. They also make Hublot watches, if I'm pronouncing that correctly, Tag Heuer watches. They own Sephora, and quite more. We're also going to discuss Burberry, Disney, which Disney is a little bit of a mixed of canned words, Gucci, Polaris, who makes ATVs, UTVs, jet skis, etc., swimming pool sales, and overall general construction of swimming pool sales. Swatch Group, who makes Omega watches. They own a bunch of jewelry shops, and new car sales, which are, also having issues moving. So we're going to discover the whole gamut. And without further ado, let's get rocking and rolling. So anyway, Swiss luxury watch market struggles to find a bottom. This is from Forbes. It was published July 16th, 2024. So today's July 25th, and pretty much secondary market for luxury Swiss watches continued to fall, according to a recent report from Morgan Stanley in collaboration with Watch Charts, which is, a very cool website. They also make videos on YouTube, I believe, and it offers data and insights for investors and watch enthusiasts as they try to determine whether the industry has found a bottom after bursting of the speculative bubble in March of 2022. And to put that burst in proper perspective, there's what's called the Bloomberg Subdial Watch Index. And at the height of it, a Rolex Daytona was going for about $65,000. That's now, closer to $33,000. And the overall index at the height of March of 2022 was $59,000. And now it's about $33,000. So that's a 42% crash. In other words, imagine you had spent $100,000 on a watch back then, which a lot of people did, and it went down by 42%, or it's now worth $58,000. I mean, that's really taking it on the chin, considering the stock market has done nothing but go up since then. And, generally, listen, I own a few nice watches, and I buy them to hold them and to wear them. I've bought 3. I bought one below MSRP on the gray market. The other 2 I bought both solid gold Rolexes. One I bought at retail. They ended up discontinuing it, the Yachtmaster 2 in solid gold. So that actually went up in value from where I bought it. And I also bought a gold Rolex Daytona, rose gold. And that's held about steady or has gone down a couple dollars. So, but the bottom line is I'm not buying that as investments, right? My investments are, stocks, gold, silver, and other things of that nature. And while we're at that note, what do you invest in? If you are investing at all, please let me know below in the comments. Anyway, so the continued price decline of high-end watches experienced a 2.1% quarter decline year over year in 2024. This marks the 9th consecutive quarter of decline in prices since quarter 2 of 2022. So basically, the used watch market has done nothing but go down. If you're a flipper, you're happy. If you're somebody who bought watches a long time ago, you're very happy. And on the flip side, if you bought it and held on to it because you had to have it because the Joneses had it or something, unfortunately, you took it on the chin. And, I'm personally looking to get another watch. It's a substantial amount of money, and I'm waiting for prices to go down because I feel confident that they will continue to go down. I'm looking at 2 of them, actually, that I'd like to get. And once the prices do go down, I'll probably do that. But long story short is what's happened. Demand for luxury used watches has cooled over the last 2 years. Luxury has plunged into turmoil because of soaring borrowing rates, hammering demand for watches, purses, and jewelry. So anyway, what's going on over at LVMH? By the way, I read from my notes, I talk freely, and I do the best that I can. I don't edit my videos, so if there's any humming or hawing or me getting thrown off, I apologize in advance, and if you stick through it, I will say thank you. I'm very grateful, and I really, really appreciate it. Anyway, quarterly sales came in at 21 billion euros, 22.7 billion in US dollars, lower than expected by analysts. And what happened? Their wine and spirits revenue fell by 5%. And their watches and jewelry division declined by 4% over the same time. And, Europe, United States, and China were the regions most affected by lower consumer demand. And, basically this channel is dedicated to the U.S. And, if you're an everyday American, like I'd like to think that I am or that I know I am, you've seen everything go up through the roof. Except for your pay, right? So everything's gone up substantially and your pay has just gone up a little bit. That's if you're lucky. Other people have continued to thrive and make more and more money. The rich have continued to get richer, and the stock market goes up every day with the exception of yesterday. The NASDAQ actually crashed, and I'd say it was a crash, even though it was a 3% decline in one day. That's a huge number. And I looked at the futures before. Today's July 25th, 2024, and they were down again. And you know what? Nobody seems to care until the stock market crashes. Nobody really, and yeah, they've been raising interest rates to help combat inflation, to help it get back down to 2%. But if you remember, it was supposed to average 2%. So, what's the biggest cause here? The printing of the money supply, which is inflation, and the expansion of it, which is, another huge part of it. And the other part is stimulative policies, including interest rates that have been far low for far too long. And, the other issue that I have is the Federal Reserve is now looking to lower rates again. And once they lower rates, the cost of everything is going to go back up, and maybe your mortgage will go down, but who knows? And let's move on to the next mini subject or topic, Disney. So they've suffered from DEI, diversity, equity, and inclusion, which I'm going to do a video on this another day. Please, if you'd like me to do a video on something in particular, let me know. And long story short is, you take 2 people, one is very qualified, one is almost not really even qualified or somewhat qualified. But if you have something that, separates you, I'm not going to go into the specifics of it, but that, you have diversity or, and you need to be included or something, they're going to pick the less qualified person. And so that's been part of it for a lot of people who are fed up with these woke policies. And, basically single day park hopper pass used to be $254, and they've had a sale for $89 on them. So that's, a substantial decrease in their prices, and they're doing that to get people back. Just like McDonald's, they were having their $20 value meals or whatever you want to call them, and now they have $5 value meals because they need people to come back because people can't afford $20 value meals. People can't afford $254 for a single day park hopper pass, no less when you're a family of 5 or 4. That's $1,000 for the day before food, before anything else. And, enough is enough. Stop gouging. Yes, you're entitled to make a profit. Yes, you should absolutely make a profit, but at some point, just stop. And Disney also reduced costs at its all-star resorts, with rooms starting at $100, depending on booking times, offering up to a 27% discount. And here's another thing. Increased dining costs have lowered guest satisfaction. To address this, Disney reintroduced dine-in plans, allowing guests to buy meals for $30 per child and $95 per adult. I think I've been to Disney twice, so I have no recollection. Once when I was a little kid, and once, 10 years ago or something with a girlfriend. And I don't remember any of it other than I don't know what in the world you could buy at $95 for a dinner. Gucci. Moving along, Karen SA shares plunged after Gucci's owner warned that profit will tumble in the second half of the year as luxury demand cools and the turnaround effort at its biggest brand sputters. So again, these are all high-end brands that we've been going through so far. And this is every, most industries as well, whether it's wines, whether it's purses, whether it's jewelry, whether it's watches. And it's not just America, it's China, it's, England, it's the UK, it's Europe. But basically, they warned recurrent operating income, a key profit measure, could fall by 30% in the period compared with the previous year. And comparable revenue at Gucci fell 19% in the second quarter. And this is important to keep in mind because I'm going to run into the next article that goes, another number of 19% being down. Exceeding the drop expected by analysts, and the stock's gone down by over 50% in the last 12 months. So, again, if everything was great, everything was hunky-dory, the economy is humming along, if there was, quote, Bidenomics, which is now going to be, Kamala Bidenomics or whatever you want to call it, assuming she gets elected, or Trumpnomics, which is, whoever we get, we're SOL. And I'm afraid either way, it's just going to be a matter of pick your poison. So, by the way, to make it a little controversial and have a little fun, if you're hoping for Kamala, let me know. If you're hoping for Trump, let me know. That would actually mean a lot to me, and it would give me a better idea of my demographics. Anyway, humming along, increasingly cautious consumer, Polaris shares crash as high interest rates crash for demands, ATVs, and jet skis. Yeah, so people are out. They're over it. Sales for off-road, on-road, and marine all missed estimates, indicating that consumers are dialing back purchases of outdoor vehicles because of high interest rates. That's according to Bloomberg. I think it's not because of high interest rates or just because of high interest rates, but because they're broke, because they're sick of paying high prices for stuff that shouldn't cost anywhere near what these companies have been charging due to all the money that the government printed, who is ultimately the crux of the problem, in my opinion. Wow. If you're still with me, let me know. Pool plunge. Leslie's crashes after full-year outlook / amid consumer slowdown. The story moves along. Pool shares plunge as full-year forecast slides on diving consumer spending. This has just been a recurring theme. And tying back into that 20%, Pool Corp, which is a huge company, their stock is $332. They came out and they said that new pool construction activity in 2024 could be down 15 to 20%, and management now believes remodeling activity could decline by as much as 15% in 2024. That's huge, right? Those are big numbers. And so somehow unemployment's great, the economy is great, inflation's going down, everything is great except to the average person, to the lower class person, to the upper middle class person who's now going to Walmart instead of Costco, or going to Costco instead of, Target because of lower prices, or Target instead of Whole Foods. It's not that great, right? And, I hate to say it, and it affects me because I do have a good amount of money invested in the stock market, but I hope the market crashes. Substantially, where it should go down to. AI, these stocks are completely overpriced. AI has been around forever. IBM's had it forever, as a matter of fact. And, what is it? It's done nothing, really. Please tell me what AI has done that's been, absolutely substantial to humanity. That's, given NVIDIA, who's doing $100 billion a year, a $2 trillion valuation, or whatever crazy number it is, 20 times sales. Give me a break. Anyway, Swatch shares crash most in 4 years as profit plunges on China downturn. Swatch Group, whose brands include Omega, Blancpain, jeweler Harry Winston, reported a stunning 70% plunge in operating profit and a 14.3% plunge in sales for the first 6 months of the year compared with the same period last year. So listen, I'm an accountant. I'm a small firm. Thankfully, we do well. I have a few employees that work for me. We have some independent contractors. We have some unofficial partners, and sales are up 20%. And, this year for me personally has been a rough year. I'm not going to get into it, but sales are up. And, these huge companies, sales are down. I mean, granted, what's certain in life? Death and taxes, right? So thankfully, I have one of those two industries in my favor. Anyway, new car incentives soar 53% amid rise in inventories and lackluster demand, hint at downturn. Part of the, quote, deflation that we experienced last month as well was used car prices decreasing by 10%. And what do we want? We want deflation because you want to pay lower prices for stuff, right? Do you want to spend $50,000 on a used car, or do you want to spend $40,000? Or preferably $20,000, especially the newer the better, the less used the better. Of course, you want to spend as little as possible. So as to why the government seems to think that we need 2% inflation is beyond me. And to just wrap it up, listen, it's not just consumers who are broke in America, China, Europe, the whole world for that matter, which is riddled by debt and inflation. The U.S. spent a record $140 billion on debt interest in June, 30% of all tax revenues. So the U.S. government is broke. And, again, you could look back at many of my other videos, including the one that I did yesterday, which touches on, middle class, lower income class consumers, food companies that have just been reporting dismal sales, lower forecast based on broke consumers, and the list goes on and on. So with all that being said, if you've watched this far, thank you. I appreciate it. And how to profit, I can tell you what I'm doing personally. I'm saving up as much money as possible. I'm being as frugal as possible. I continue to invest into the stock market, dollar cost averaging. I'm continuing to invest into my retirement account, of course. I believe there'll be more of a pullback in silver and in gold, especially if Trump gets elected. Silver is about $27. I looked today. I'm thinking of buying more. Anything up to $30, I'm happy to buy it. I don't like paying the premium, but you got to do what you got to do, right? And when I buy stocks, I'm looking for foreign stocks. I'm looking for international stocks, which is foreign, obviously dividend-paying stocks, and necessity stocks that hell or high water people are going to pay, right? They're going to pay for, in a depression or a recession, they're going to pay for cigarettes. British Tobacco American, they're going to pay for beer. They're going to probably pay their utilities because, you need your utilities. And other companies, gold and silver, which, especially silver, which is huge for solar, huge for electric vehicles. And yes, those are luxury, items, but again, they're also necessities that we're going to need. And the dig out ratio on silver to gold is actually very surprising, which to me lets you know that silver is probably very underpriced. I could probably do a whole video on this. And the other thing I'd like to point out is, the gold to silver ratio is still absolutely substantial. And invest in yourself, right? The more you better yourself, the more opportunities you're going to find. I've been growing this YouTube channel. I'm, launching my .coms. My firm has been launching other products as well. And, that's the best we can do, So anyway, if you've watched this far, let me know. I appreciate it. Please be sure to like, comment, and subscribe. Hope you have a great day. Hope you're having a great summer so far. And thank you.